Okay, guys, so welcome to our game plan. I think this is the third one I've done so far. Now, I'm going to start off straight away. And in this video, we're going to discuss the reason why the dollar has been acting the way it has been. And it seems to be almost like the market is playing with us. So by the end of this video, we'll definitely know what to do. So let's begin. There's a lot going on, and you can see from this week, if I just look at the range for this week, starting from the highest point to the lowest point, you can see that we've ended up, in essence, about 50% of the way there. Now, if you want to check the weekly candle, you can. If we did a quick check, now I know I have markings on top of mine, but the high is 104,983. So if I just hover over here, 104,982, I've got 982, so remember that, down to here. So about 127.5 pips, okay? So 127 to 128 pips. That is the range for the week. Now, if I quickly go back up to where we were with these markings, we're in the middle, we're about midway between. So that lets you know that we are in a situation where the market has basically been ranging. Where it started from at the beginning of the week, which is around here. If we follow the H4 candles, this is about 20 hours in, so about the end of Monday to where we are right now. We're basically almost in the same place that we started in, which obviously is very annoying because I'm sure you've seen from this week that the market has been quite rangy. There's been some great movements, but the price has pulled back and almost swallowed up everything that you would have gained if you held on for too long, unfortunately. Now, what's going on? Now, the reason for this movement here is that I'm going to drag this across here is we have what we call unfulfilled efficiency. The price did a signature for a reversal, but without supply. So the price hasn't had enough liquidity to actually produce this short. And I definitely do think that, you know what, when I first marked this out, for whatever reason on my chart, the price was in supply. But I guess decluttering the writing I had and just looking at the chart, and this was by chance. I looked at this, I think the next day on Tuesday maybe, and I realized, wait, hold on. The price actually hasn't done this signature we want into the supply zone. Now, what does that mean? It means, well, next week, the dollar is going to be bullish again, okay? And the price will definitely be making its way into this area. So what is the price doing now? So if I was to bring up the dollar index here, okay, this is the old markings that I had. Now, I don't know what happened if I had it over here like that. I don't know what happened here, but okay, whenever I draw supply and demand, I choose to use the bodies of candles rather than the wicks. Now, without going into a long explanation and to save time, the body of the candle is where I look at when it comes to supply or true supply and demand. And of course, the wick of the candle came to this area, but not the body. All right. Now, if I open up a fresh dollar index chart, and I'm just going to do that now for you here. Yeah. So for the dollar index chart right now, where we've been so far, if I go to what has happened on the lower time frame to tell you what the game plan is for next week, I'm going to show you here. So on Thursday, and I'll drag this over here, the market opened up with a liquidity gap. And this liquidity gap still hasn't been filled. Now, the one on the upside, I guess you could arguably say it has been filled. Not with the body of the candle. You could see the last full body was over here, which is just below this high. So we haven't had a body close to fill this gap, but the market has left a liquidity gap here. Now, if I follow through the price on the 15-minute here, we have this area here, and I'm going to just drag this along. If I do this, all right, we have a supply zone that has become demand. Price used that to proceed for a long. Okay, and then what we see is that, and this is key to, very important to look at. Look at this supply zone over here. If I drag this across here, look at this supply zone on the M15. This is a key to understand supply and demand and what the market has been doing. So we had a pullback. We left the liquidity pool right over here. Right here. Okay, and then with that movement, the price, the last candle of the day was inside of this area. The first candle of the day or market open was right here. As soon as market opened, the market gapped up and left us a liquidity gap here that needs to be filled. Okay. Now, in some instances, the market may not fill the gap, but looking at the price right now, there is room for the price to maybe pull back down here one more time. So what does this mean for the game plan? You know, getting straight to it, our game plan for the week would be to be prepared for the price to pull down. And what would that mean? That would mean that we'll have negative dollar strength. So I'm going to write that out in big writing here. So I'm going to put this back to 10. And I'm going to put here negative. So negative dollar strength. Okay. So with that negative dollar strength in mind, just until this point, and then we should be going for positive dollar strength. Now, I haven't drawn the H4 area, but I'm going to draw it out for you guys so that we can have a look at where we are. This H4 supply zone is really still the first target because we haven't reached there yet as to where the price could begin to reverse and give us that short that we're all looking for. So what I want to do is go back down to the 15-minute, scroll up a little bit so we can scale out. And what we'll say is that we should be looking for positive. Now, according to this, there's about 100 pips worth of distance from the price comes back here where we'll have positive bullish strength on the dollar. Okay. Now, what does this mean in terms of our pairs? Now, I'm going to do some markings this time and put this underneath so that you guys are with the picture. So if I do this here, negative, I'll make it red. Okay. If that makes it easier for you guys, make that red. Okay. And then I'll make this blue. So red and blue right over here that we have. If I was to draw something underneath here, what would this be? So what does that mean? So the game plan literally into next week, what we should expect is XUSD pairs, okay, should be going. In essence, when the market opens, how do we approach the market or what would it look like? This is what I'm writing out right now. So I'll put this in black. So for XUSD pairs, if the dollar becomes negative, it means that they would go long, okay? So for market open, the expectation should be, or I have, and would be XUSD pairs would go long. And then on the other side of the story, USDX. Now, what does X mean again? Just a reminder, if you've never watched any of my videos before, I'm going to write this out. But X just means any other tier 1 economy pair. Because we're focusing, right now, we're focusing our efforts on the major pairs. And the reason why I'm teaching along this line and talking along this line, even though I've made most of my profit in the last 2 weeks from cross pairs, is just simply because we want to see focus on the pairs that actually have the most liquidity and are the easiest to work with, especially as a beginner all the way to the advanced level. You know, you'll think that when you become more advanced as a trader and you've been trading for many years, that you trade more pairs. Now, when I first started trading, that's what I thought. That, you know, when you become really good at trading, then you're going to have 20 charts open, like I've seen. You know, I kind of thought it was the kind of, you know, Wall Street experience or Chicago, you know, the CME kind of experience, but it's nothing of the sort. To be fair, it's more difficult to be simple with trading, and it's a lot more easier to be complex. You know, it's easy to have 100 indicators on the charts than to have a single one. Why? Because in trading, maturity is really about being definite about your decisions. How accurately are you, or how sure you are about making a trade decision? So, you know, if you're around traders who are professional, you notice that they usually have maybe 1 or 2 entries, but they're very highly sure about the entry, because really trading is a game of probabilities. And, you know, if you have, and the key is that the market is in the same way we have a casino where we say the market always wins, or the house always wins, I should say. It's the same in the market. You know, the house always wins. There's a percentage or probability disadvantage fundamentally for all retail traders. And so for you to overcome that disadvantage, you need to, number 1, have great risk management. And number 2, you need to be very accurate with the decisions you take. Okay, it doesn't mean you have to be accurate about every single trade you take, because nobody ever gets it right 100%. Okay, but you do want to be accurate with the decisions you make. Big difference. And so as you mature as a trader, you actually spend probably less time on the charts with less amount of pairs, and still be able to produce results, because the understanding should come from the fact that in essence, if you can gain profit from one specific pair consistently, consistency and maturity go together when it comes to trading, rather than, trading 7 pairs at the same time. It can happen. Greed can be a reason as well that can happen. But as you mature, you allow the market to take care of what you're looking for. If you take care of your analysis, the market will take care of your bank account. And that's how it should be. So to recap on this, looking at this liquidity gap, which is a 15-minute one in a sense. So from looking at the 15-minute time frame, these are quite small liquidity gaps. And so I don't expect the market to delay in filling those. So if we get this, then market open should be a situation where, XUSD pairs go long, USDX pairs go short. Okay. This is what we're looking for here. All right. On the other side of things, what we do want to see is the price. After the price settles, we should be looking to see a positive dollar, or the dollar strength to become positive, which means USDX pairs will go long, XUSD pairs will go short. This includes commodities too. All right. Now, at this highest point, okay, which is the picture we're looking for, the final thing that we're looking for before, this last short that we're looking for, because this is really the picture of, or the schematic of where we are. If I go back to the H4, I know my charts are a bit messy, but ideally we're working our way down to the price to give us this last negative strength on the dollar before we have a more long-term bullish run due to inflation and the things surrounding inflation. Okay, so paying mind to that, or making that your making that your decision there, I would say paying attention to this chart and everything that we're doing will be very important for you. Now, I paused because I wanted to find something for you, but I don't think I can find it. It's all right anyway. But what I would say to you is, this is the schematic for the more long-term view. We do need a very strong bearish, movement before the last bullish one, or the last bearish one before the massive bullish one we're looking at. Of course, we need a trigger for that to happen. And the trigger we have, unfortunately, is not a trigger. Okay, at first I did think it was a trigger, but it actually isn't. And, with that being said, we should be looking for this to happen between now and next week. Now, we will take a look at the news, but even if I don't go through any pairs, or, touch up on any pairs really, my main focus will be on the dollar index, because this is where we are. Now, laying out the foundation, we have our top 3 pairs. And what I would say this time for this video is that, as a quick recap, I'm going to go through the top 3. But I definitely recommend this week to look at Thursday and Tuesday's live. Now, excuse my voice, is getting better bit by bit. I had a really strange moment where my voice was just going, but I'm getting back now. So I'm hoping that you guys can definitely take the time to listen to those 2 lives. So what I'm going to do, I'll just actually use USD-CHF, which is our first one. And I'll stay on Hugo's way now. And we'll just take a look at what we've got going on. So USD-CHF has been a great one. Let me just put my normal template on. All right. So you can see that price has been kind of all over the place. And if you're watching the lives, then the 3 o'clock time limit that we had for the last PMI news, which did give us some sort of reaction across pairs, was, I guess, a mixed reaction. But things like, for example, gold that we were looking at and in did go short for a bit and then has pulled back all the way. So the market has been, in one word, annoying. Okay, but at least I've given you the foundation to understand why the market has been the way it is. Now, we've had this stop on over here happen. Okay, this is what we're looking at here. And along with that, we've had on the daily time frame this movement here. Now, if you can remember, I was looking for when February's high took the high of January into this blue area, which is weekly supply. I was very excited because I knew that price is sooner or later going to give us a very strong reversal. That's the perfect signature that we need for a reversal. Okay. However, as we got towards the last days of the month, we've surprisingly had a body close above the area. Now, since we had a body closed, that suggests a continuation. So we should be looking for the price to move further along. Now, as of recent, we do have another wick close, and this is in March, the second day of March. So March the 2nd has taken the high of the previous month. So we've had a monthly stop hunt, if you can call it that, monthly induction, whichever way you would like to call it. So laying that out now, of course, you can see the price action already looks quite bitty. We have a liquidity gap here. Price has kind of gone long and gone back short. Kind of, when I first grew up in trading, one of the terms they used to use was indecision. Now, that's a very misleading term. And in my course that I, teach my students, and I explain why indecision is the wrong word to use, because I always want you to know that the market, the institutional money and above governmental money always know what their idea and their plan is. They're not indecisive at all. The algorithm of the market is very specific. Any other price action you see that looks like this, where it's back and forth, is not indecision, it's accumulation. There's a lot of buy and sell orders and sell limits, sell stops that have been built. A lot of stop losses have been run. Probably this week, they probably made a lot of money from traders. I can definitely guarantee, simply because of the way the price has behaved. Okay. Now, for me, looking at what we have, USD CHF, to me, has taken the high. And we also have this manipulation bar here. So if price was to pull back, now, this is all in line with the dollar index. I want you to know, like, for example, now for me, my only problem with USD CHF is the way that these highs are formed. I do think that there is a good possibility that the price could take the high of the week and then go short. Something of the sort of this. All right. Now, the easiest way for you to be able to know when to get in and when to get out with the dollar trades that we're looking at is to use the dollar index. For me, how I'm putting this, and this is as simple as I said it to my students, and I'm saying to all of you, is the moment I see the dollar index get into this area here on the H4, and it gives us a wick close inside of this area too, then wherever the entry price would be, or whatever signature I see that's matching. So if USD CHF is taking a high of the week, is done structural breaks, is returning to supply in the right areas, then no matter what happens, even if I take a long next week, I'll be closing my shorts. Closing my longs on, for example, on USD CHF, and I'll be opening short trades to make my way down, or a short trade, singular. Okay. So this is the way really to map it. All right. And I'll use USD CHF as an example. I guess I'll do one more of the top that I'm looking at, which is the opposite direction pair. Now, ADUSD has been fantastic also. And put my standard template on. It has got great signatures to it. On the weekly time frame, I like it a lot because the weekly time frame gives us good information. If I follow through with demand and I just keep this demand zone here, you can see the price has taken the low of the previous week with a brilliant reversal signature here. Okay. Now on the D1, all right, you can see that the price has really been hanging around this area for a while. And I did say last week in the game plan that we should be looking for long soon. And I think this 1 week delay that has been perfectly timed, by the market has definitely accumulated enough liquidity, stopped out traders, frustrated them, definitely frustrated, because I wouldn't lie to you and say that the market hasn't been frustrating this week. If you look at the price action of these last 2 days alone, they've been absolutely just annoying. That's the best way to put it. Now, it seems as though Friday is left off with a little clue as to what we could have. Now, the price has taken the high of the previous day. We had the short is come back to the exact same area for, like, according to this, like the 9th time, which if you were selling this and you had an entry here, you would really be annoyed. Okay. And the market can get like this sometimes. This is market manipulation at its finest. all they're really doing here is psychological warfare. Get all the traders to be annoyed. I'm sure many maybe traders are expecting what I've been talking about, possibly not. But whichever thing they are expecting, whatever direction right now, the market is frustrating. So, you know, USD, AUD USD, I do think to really get traders thinking that we're going to go short one more time, I do think that this low would be taken. There's another low over here, which according to well, this is the thing now. I'm going to take off the period separators to confirm. Okay, yeah, for sure. So this is the low of January. The low of January actually wasn't taken by February's price action. So in March, we could also get the price taken this low. I wouldn't be surprised if that happens and then we get the trigger. Okay. So really my view, just like I was saying with USD CHF, there is room for another short, even if the price doesn't take this low, but just pulling back here one more time, or even just taking the low of the previous week, which is this line right here. That's good enough really for us to start to look for a trade. Now, I wouldn't say take a trade yet because price taking highs and lows being run doesn't equal to a trade. The most important key to remember is the change in market structure or the break of market structure. That's really the key to really help you get what you need to find in terms of a trade. So I'm looking for anything from this range all the way up until we get this long we're looking for. And then we can start to make moves from there. So I believe that next week, hopefully, should be a good week. Next week, we do have the NFP news, which is really good. And we can definitely take advantage of what will happen with those pieces of news. So the final thing really I want to go through is just really to pull up the news for you guys and have a simple but effective look at what's going on in terms of the news. So I'm going to put this here, FX Street. Just going to pull up this area right here. Let's take a look at what's going on. All right, so let's look at next week. All right, now, as I always say to you that the news is not really what I use to be able to determine a trade, but I do use the news for timing. You know, as I've matured as a trader, one of the fundamental understandings that I learned from institutional trading is what the news shows, or what fundamental news, especially data news, knows. Institutions have mapped out what the price or the percentage or the number would be, which is called the whisper number, the consensus figure, quite a while back, because they have, you know, very intelligent people who have made very strong data models to work out what's going to happen. Technical analysis lets you know is the fastest way for you to know what's actually happening in human activity, in every economy, in every part of civilization. When the news comes out, it's just usually to confirm what you already saw with the correct technical analysis in terms of direction, entries, and etc. So in this case, looking at the news, starting from what we have. So on Sunday, this was the news that we had. Now it says loading. I'm not too sure what I've done. I think it should be next week I should put down, not this week. All right, so next week, let's have a look. So the only high impact piece of news for the week, or for Monday, is European sales, and it looks like it was previously minus 2.8% year on year. So this is 2022, and they're expecting it to be 1.9%. Okay, that's interesting. Let's see what happens with that. Into Tuesday, we do have the rate statement for the interest rate decision for the Australian dollar. So already we might have an advantage with the Australian dollar, where we could get this news to create that induction of the previous low of January, or even the previous weekly low. Depends on where we are. Now, this is the week where Jerome Powell testifies to the government. So there will be usually the testimonies over 2 days. So there's usually a Tuesday one, okay, and then there should be a Wednesday one as well. Yeah, there you go. All right. Now, coming into this week, we do have a lot more high impact news. Of course, we have the non-farm payroll news this week instead of last week. And the reason why, as I'm saying, if you're not too sure, usually if the beginning of the week starts at the end of the month, or at the end of the previous month. So in this case, this week started with the end of February and is beginning with March. So how they will count the first Friday of the month for the NFP news, which is the regularity of when it comes out, would be the first full Friday, you know, within that month. So the next week will be the first week where all the dates are in March. So This week, the NFPs is, going to be Friday the 9th. So moving forward with that, we have the ADP news at 1:15, which is an important piece of news, simply because 60% of the payrolls are managed by the American Department of Payrolls. This is them. If I click on this, you can have a look and read the information. Okay, so it's the largest payrolls provider. And so they're a very good piece of advice to use because they help for you to get a preview of what the NFPs could be like. Okay, there are recently, funny enough, speaking about it, there's been quite a deviation between the news of the ADP and the news of the NFPs, and I don't think that's by accident because, of course, I'll be realistic. None of the institutional money and above don't want retail traders to have an advantage over them. And so there is a lot that, I mean, data is data. They can't really change it. But there are times where I've seen the ADP being completely different. This has been negative, but then the NFPs are highly positive. So, this wouldn't be it's a good piece of information to have as secondary, to your other hypothesis you have for a trade, but you can still use it. Now we have the interest rate decision for the Canadian dollar. And I'm very interested about this because if you look at my video 3 weeks ago, the Bank of Canada was suggesting they may have a pause, and it's conditional as to whether the interest rates they've raised have actually had an effect, on the economy. So this is the first time we're going to see whether they see an effect or they don't see an effect. So this Canadian dollar news is actually going to be one hell of a time. Okay. Now, the next one to look at is we have the GDP for Japan, which, as I said recently, Japanese news has been causing, a bit of a stir in the market, which is interesting, especially now that we have the new governor coming in. There is room where I do say that the market could really have some effects on the Japanese yen pairs can have some effects in the market, in essence. So Thursday, nothing of importance really. And then Friday, of course, we have the interest rate decision, which I don't know why it says NA here. I don't know if it happens exactly at 12. I need to work out what the time is because it always says NA on mine. If any of you know the exact time, please leave in the comments because I don't know why mine says NA. Because it really is applicable. I don't know why it says not applicable. But anyway, now here we go. We've got the non-farm payroll news. And because of the delay of the NFPs by 1 week, it's also lining up with the same time the Canadian dollar news about the interest rate decision. So next week, I'm going to be spending a lot more time on the Canadian dollar simply because there's lots of news that can cause the Canadian dollar to go all over the place, which is good for us. All right, so I'll be analyzing next week, and I hope you guys really enjoyed this video. And everybody take care and have a great weekend. And enjoy the rest of your day, guys. Take care.